This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with William Bissett of Portus Wealth and the Charlotte Angel Connection. William, thank you for joining us.
Yeah, no, thanks so much for having me on. I'm looking forward to our conversation.
Great, me too. And so we always start off with, what was your background before investing in early stage companies? What did you do before this?
I was boring. No, I'm just kidding. So I started off, graduated school, ended up in kind of insurance sales, hated it, flipped over and was fortunate enough to land with a great financial planning wealth management firm in Columbia, Maryland called Pinnacle Advisory Group. Worked with them for a number of years. And part of the way through that, I started to realize that some of my clients, as they passed away, I always thought wills and estate documents were all they needed. And as they passed away, I realized that wasn't the case. They needed somebody to kind of step into their life and unwind everything that they controlled on a day-to-day basis. And that took a lot of knowledge and time. And so in 2012, I hired a software development team out of Raleigh, North Carolina, and we developed a web application that allowed individuals to gather that information as well as store it and share it with pre-selected people. So then when they did pass away, it was an easier process for somebody to step into their shoes and unwind it. And I ran that for a while, had a little bit of success with it, but ultimately realized that it was a longer haul than I thought it was going to be, and that I probably wasn't the right person to run it long term. So in 2015, I shut it down. So that was my venture into the startup world. And as I was shutting it down, somebody who knew me said, "Hey, look, you had a pretty good run. You probably have a lot to offer back to other early stage companies. There's this group in town called the Charlotte Angel Fund. Would you like to come out and, see what it's all about?" And as a matter of fact, that meeting was that night. So I went to my Charlotte Angel Fund meeting about the same day that I shut down my company. So that's kind of what I was doing. It's still what I do. I now, rather than work for Pinnacle, I own my own private wealth management firm. So I had a short stint as my own startup founder, and now I work with clients that are interested in investing in this space as well. So I'm back to kind of pure wealth management.
Great. Well, it sounds like you had a good experience as an operator, and I'm sure that informs your investment thesis in many ways. But tell us more about your angel network and what that's all about.
Yeah, so the Charlotte Angel Fund was started here in 2012 by a gentleman by the name of Greg Brown. When I joined it in 2015, I want to say there are 30 members of the Charlotte Angel Fund 1. They've since closed that, still running through some of the portfolio companies as you would expect. I think we made our last investment in 2016 or 2017, so probably another 5 years left in that fund. Greg started Charlotte Angel Fund 2 in 2017, 2018. And fortunately, we've had a good growth, or Greg's had a great growth in membership. I want to say we're up to 78 or 82 members in Charlotte Angel Fund 2. So once a month meeting, 3 startups from kind of the Southeast, primarily the Southeast, come pitch to an audience of usually somewhere between 50 and 60 people. And then we typically will go through due diligence with about one of those presenting companies every month. Go through due diligence, and then the committee makes a due diligence recommendation to the rest of the angel funds. So kind of classic committed capital. So $25,000 entry, you write the check, you're in the door, and then you're pro rata into every investment, along with add-ons for any company that you choose to. Or if the fund doesn't invest in any particular company, you can have the opportunity to chase down that company on your own. So good structure. It's a great way, I think, for folks in Charlotte. As you probably know, Hall, Charlotte's a traditional banking town with lawyers running around all over the place too. So not necessarily a hotbed for people that have traditionally had success in this space. So for folks that hadn't had success in this space, to have an angel fund that kind of helps walk them through it, I think it's a great way to introduce the city and those in the city who are kind of curious about it, introduce them to it appropriately so they can get to know it better before they might go out and do it on their own.
Great. Sounds like a great fund and a good opportunity for people to learn about angel investing there as well. But you've been in the angel world for a while now. How do you see that industry evolving these days? What changes do you see coming up?
So I think it's just an exciting time to be an entrepreneur in general. But things that excite me right now, selfishly, I'm pretty excited and about the Southeast. I think we've seen a couple of different hotbeds over the course of the last couple of years. Obviously, Atlanta's been there with a great little startup space that continues to expand. Nashville's had a lot of success in the healthcare space, in the startup healthcare space. Raleigh's had a fair amount of success over the course of the last 10 years and some SaaS aspects as well, most notably with Red Hat and a couple other exits over the course of the last couple of years. I'm excited about things that come out of the Southeast. I think Southeastern entrepreneurs have to be a little bit more scrappy. They don't get some of the notification or some of the recognition that entrepreneurs elsewhere in the country get. It's a little bit harder for them to raise money. They've got to be a little bit more diligent with this. I think there's some cool things going on there right now, geographically speaking. We're starting to see a little bit more stuff here in Charlotte, and I don't know if y'all are too, kind of in that real estate space. It seems like the real estate sector still operates not even on spreadsheets, right? And they operate on like stone tablets from the 1600s. And so some of the stuff that's coming out of the real estate space, and a space that I think can really be disrupted quite a lot over the course of the next decade, will be really exciting to watch. So Southeast and a very traditional kind of spreadsheety world of real estate are some of the things that kind of get me excited.
Well, that's great. So, what's the biggest challenge you face today in that angel network you're running?
So the biggest challenge with an angel fund in a traditional banking town with Charlotte is just getting people to understand investing in a startup company is inherently risky, right? I mean, you're out in Texas, and obviously Austin's had a lot of success with different entrepreneurs and acquisitions and everything else. And we're getting there in Charlotte, but most of our investors are still coming from that outside world. Even if they're a small business owner, they're constantly thinking about what's cash flow, what's the profitability of the underlying venture. And don't get me wrong, we all like profitability, right? It's a great thing to strive for. But when a company's just getting out the door, it's oftentimes not there. And so you end up passing up on some opportunities that you probably shouldn't have. So having some mechanism to invest in those pre-revenue companies, those back of the envelope companies, having some way for a community like Charlotte that's just trying to get out of the gate. I guess we're probably a little bit further than out of the gate. Having a mechanism for this community to invest in startups in that manner, I think is pretty important, just because, again, we don't have that experience where we've got the founder that's exited, that has that excess money to plow back into it, and they understand it takes a while. So that's the challenge that I think new spaces like Charlotte have. They don't have a lot of people like you out there being able to teach investors what to do, how to do it, and why to do it. So I think it's a big challenge right now. And I think it's an opportunity for a lot of people to grow into being an angel investor, is realize that you just got to take that risk and go do it.
I agree. It is a challenge to do pre-revenue deals because there's just so little there to analyze and so little history there to look at. It's the team and the technology, and that's about all you have to work with. And it can be tough, but it sounds like you're making some good progress with it for sure.
Everything's steps, right? You can't go from 0 to 60 unless you're in a Tesla that quick. My little Jeep won't move that fast. So I feel like Charlotte's probably not a Tesla these days. It's maybe a little bit more of a Suburban, and it's just going to take us a while to get there.
Great. So let's talk about your fund and the investment thesis for it. What is your investment thesis, and what's your criteria for looking at specific deals?
Yeah, so a lot of the thesis for the Charlotte Angel Fund here is we want to almost limit ourselves to a Southeastern theme. We've stepped out of bounds there a couple of times. We've looked at a San Francisco company. We've looked at a Boston company. We've looked at a couple companies out of Texas and stuff like that. Not saying that Texas isn't in the Southeast, but So the main thesis is that by nature, again, of what I said earlier, although it's not a prerequisite, almost a prerequisite to get funding is to have some type of monthly recurring revenue, show some traction out there in the marketplace. Oftentimes kind of joke around a little bit, and it's debunked a little bit over the course of the last year or so. That's something a town like Charlotte or a city like Charlotte and the Charlotte Angel Fund, we're almost kind of a little mini Series A type fund where we're not seed or pre-seed. We're looking for a little bit more traction out of the company before we get there. So again, not a prerequisite. Greg Brown, who runs the Charlotte Angel Fund, has actually done a really nice job lately. He set up a program where pre-revenue companies in the Charlotte metro area who are raising less than $250,000 can kind of qualify to present to the fund under a different bucket, whereas a traditional company that comes in might get $150,000 out of the fund plus another 150 or 200 or maybe more on add-on investments from underlying fund members. The pre-seed Charlotte metro companies that are raising $250,000, typically what we'll see is a $50,000 commitment out of the fund plus another $100,000 or $150,000 commitment out of add-ons. So we're trying to use the fund, or Greg's trying to use the fund for a large part to support and nurture the entrepreneurs here within the Charlotte area. So outside of that, I mean, up the road, we've got the Research Triangle Park with a lot of medical stuff. So we do see a fair amount of medical stuff coming through here. Obviously, just your classic SaaS companies. And Dan Roselli, who started QC FinTech, which is an accelerator program here in town, has done a nice job with the FinTech space. So we end up looking at a fair amount of FinTech type companies as well. So not a direct thesis, so to speak, where we're only investing in manufacturing, not manufacturing, but SaaS companies serving such and such sector. It's a little bit more regional from that perspective.
Well, very good. Can you talk about one or two portfolio companies that you particularly stand out in your mind?
Yeah, we very recently made an investment in a company called New Fabrics, great little company out of actually back down here in North Carolina, developed technology up at MIT, developed it over the course of, I think, 6 or 7 years, where they're essentially infusing medicine into fabric. So think of a knee brace with a painkiller infused into it so that it's a slow release, so that you put the knee brace on and then you're also getting some medication drip through on at the same time. They just got a sell through to Walmart. I think that launches sometime here in April. They partnered with the company promoted by Mike Tyson in the CBD space to explore some ways to grow it from that perspective. So really nice size, fast growing company. They're hitting kind of on all cylinders, growing at a nice pace. Another company that we're just now pulling the trigger on, probably by the point in time that you publish this, is a local company that qualifies under that smaller kind of seed stage type company called Vision, founded by Sam Smith here in Charlotte. They're essentially allowing users to find a color that they like out at a restaurant or in the nature or whatever, take a picture of it, and then search that color for paint samples, fabric, furniture, or anything else out in the marketplace. So if they find a color they really like, they're able to start to search and find things that might fit that in their house or apartment or wherever it is they live. So two different companies that we're looking at with fit those two theses. I think Vision's been up and running with the beta platform. I think they launched their beta platform in December and just released out into the wide world here at the end of February. So very early type company. And then New Fabrics, again, selling through to Walmart, is a much more mature company that would be kind of that more mature, almost mini Series A that we classically invest in through the Charlotte Angel Fund.
Great. So you've talked about your fund and how it works at a high level. Can you give us some more details about the mechanics of the fund, check size, follow-on rounds, that type of thing?
Yeah, so great question. So again, the commitment is a $25,000 commitment out of the individual on a minimum level. That's for one unit. You can purchase up to 4 units. So in essence, you can obviously go up to $100,000 commitment. Classic investment check size for the fund has been in the $100,000 and $150,000 range. Last meeting, when we were running back through the numbers, we were the member add-ons were averaging about 2.5 times whatever the check size was. So I think the goal for the fund is to get to a 3x member add-on. So we're writing checks somewhere in that $250,000 to $350,000 range. Love to get to a point where the membership is more comfortable doing the add-ons, where we're funding a $400,000 or $500,000 round just from the fund itself. And if you go back and look and you just talk about growth and how communities grow, and it's nice to see it. Out of Charlotte Angel Fund 1, the first fund that Greg set up back in 2012, 2013, the average add-on in that was about 50% of whatever the fund put in. So fund put in 100,000, member add-ons were 50. So you can just see from fund 1 to fund 2, we've gone from a 50% to a 250%. So it's a nice growth in terms of members being more comfortable with the space. So functionally speaking, and again, it's a committed capital. You put your $25,000 in, and then you get, or 50 or 100 or whatever the number ends up being. You're on a pro rata basis. Membership meetings are voluntary. Due diligence committees are run by the members themselves. Greg does a great job in helping gather all the information, but and is at each due diligence meeting. But typically, we have 4 or 5 members who either have expertise or interest in expertise who sit in on the due diligence meetings, and each one of them is assigned a certain segment of the pitching company. So somebody's tied to financials, somebody's tied to marketing, somebody's tied to teams, somebody's tied to deal mechanics and everything else. And so as we're going through that, their job is to gather all the information before the due diligence meeting, during the due diligence meeting, and after. We typically write up somewhere between a 25 and 40 page document outlining the investment thesis, either up or down for our membership, so they can use that to make a vote, and then also to decide whether or not they want to make their own add-on at the same time. So does that answer your question as far as the mechanics of it, Paul? I just want to make sure I grabbed it right.
Yes. It sounds like a well-structured fund with some good thought put into it and a good diligence process as well. That's great to see. So what excites you right now? What gets you jazzed these days?
I don't know. Everything, I think. It's I think one of the coolest things about this hall is the opportunity to see into the future over the course of the next 5 years. I mean, you sit in your classic person that doesn't step into the space. And they sit in their cubicle, they drive to work, or they sit in their corner office or whatever it is that they do. And they just notice the future as it shows up. And I think the neat thing about being part of an angel group or an angel network or a syndicate or whatever avenue it is that people choose to do this world in, is it just shows them what the creative folks out there are pushing for, what they're trying to bring to us, how they're trying to bring it to us, new business concepts. So, I mean, I get just as jazzed about seeing these entrepreneurs pitch and the energy and excitement and the innovation that they're trying to bring into each community. And that's to sit there and watch that engine of economic growth in front of you 10 minutes every time somebody pitches. That's a super cool and exciting thing. And it's disappointing to me that more people don't get the opportunity to participate and see that on a month in, a month out basis. So outside of what we talked about earlier, as far as Southeast and kind of real estate being an exciting piece, I think watching entrepreneurs do their thing and answer their questions and everything is just a super, super cool, exciting process to be a part of.
It's an exciting time. There's a lot going on, and it's always fun to be a part of the early stage world as well. So I understand the excitement you see there. So you deal a lot with investors. What's your advice for them when they first come into your group and start looking at startups? What do you tell them to do before they write that first check?
Listen. So listen and grab somebody, right? I mean, it's one of those things, as you know, I have my own podcast. I was doing a podcast interview with a venture capitalist the other day. And he jokingly said that back in the day, they used to say it always took $20 million to educate a venture capitalist. And an angel investor, to classic angel investor, maybe not want to waste $20 million in bad investments before they understand what they're doing. So one of the cool things, and I think you asked about it earlier, that's kind of brewing in the industry is smart individuals that have had success in this space, forming syndicates that people can participate in. I think that's a cool way to do it. Learn from somebody, ask questions. Why did you ask that question? Why weren't you curious about this? Grab somebody that's been there for a while and really, just like any other opportunity, when you walk into something, you've got to understand and try to prevent making all the mistakes and learning from somebody else that's already done it. So, grab the bull by the horns, ask questions, and be somebody that wants to be outspoken in 6 months so that you can form your own opinion rather than constantly have to sit back and wait for somebody else to form the opinion for you.
Well, that's good advice. And on the other side of that table, what do you tell those startups to do before they launch that company and ask for funding?
That's a great question. One of the first things I try to get every founder to do is to, as if they've reached out to me and just kind of ask to take a look at their pitch deck or just general advice or whatever, is to go to an angel fund meeting, right? Go to some place where you can see a pitch and then live audience questions. And then just as importantly, if those angel groups ask questions after the entrepreneurs leave, stick around for that part too, because what entrepreneurs really need to see is how fast the conversation can go sideways based on one person having a negative opinion of the way the founder answered this or said that or something else. So that as they think through that, what are some of the key narratives that they want to leave investors with so that it's not up for speculation for somebody else to turn the conversation on its head. So as an entrepreneur, find some place to go listen to investors, watch investors kind of do the tear down of entrepreneurs so that they can know, and truly understand how much they have to know about their companies, and also know how much they really need to try to direct the narrative before they walk out of the room.
Well, that's great advice. So many entrepreneurs come in with the entrepreneur's perspective, yet the audience is filled with investors, which has a very different perspective. So that's good coaching for sure. Get them to think about what your audience is going to look at it. The entrepreneurs look at the opportunity, the investors look at the risks, and those are very different lenses to go at a deal.
And oftentimes when you go at it like that, you create friction. And when friction happens, you can lose control, right?
Absolutely. It can get heated too.
That's right. Good point.
So in the last few minutes that we have here, what else should we cover that we haven't?
I saw it interesting. It's March 10th, and obviously we're kind of in the heat of the moment with the coronavirus or COVID-19 or whatever you want to say. And I think entrepreneurs, as they are out there, they need to take note of the way people are responding to it and understand the fears and concerns that people have. And it goes beyond just this, right? There are time periods that pop up that's going to make fundraising difficult. I mean, the market's dropped 15, 16% over the course of the last 2 weeks. Our investors going to be a little bit tighter with their money. If we get a full-blown recession, what does that mean? So I think entrepreneurs really need to take note. All of us get so involved in our day-to-day life, and we're quote unquote horrible term to use, but I'll use it anyways. We get so laser focused that we forget to kind of pick up our heads and think about where everybody else is. So it kind of goes right back to what we were talking about earlier. When there's something big in the news like that, think about how investors are going to react to it. Think about what some of their big concerns are. Think about preserving capital, trying to make it stretch further, et cetera, et cetera. So entrepreneurs have to be nimble. They have to be ready to react. And I think this is one of those things that is just maybe for the next 3 months going to cause them to really need to shift that focus a certain extent to continue to be able to grab investors in the door.
It's going to be a test for both the investor and the entrepreneurs, I believe, and be interesting to see who's swimming naked at this point as the tide goes out. So looking forward to seeing what we get from that. So how best for listeners to get back in touch with you?
Obviously, I mean, I'm out there on LinkedIn. It's a decent place to get a hold of me. email address I think you have, and maybe put in the show notes, would just be william@portusadvisors.com. And I'm out there on Twitter a little bit at WB Bissett. But I think LinkedIn and email are probably the easiest ways for people to get a hold of me, Hall.
Great. We'll put those in the show notes and want to thank you for joining us today. Hope to have you back for a follow-up soon.
Yeah, no, absolutely, Hall. And look forward to having you on my own podcast here in the next couple of weeks as well. So thanks so much.
Looking forward to it as well. Have a good one. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.